Okay, guys, let's get started. Okay, the first thing is I will be sharing a software and I will be sharing a video, two videos I'll be sharing how to install software using multiple screens. And then second software is how to apply the process from analysis leading to trading plan, leading to the process itself, three-stage process. So I want all of you to use that software. It's a stimulator, force tester. I want all of you to use that software to practice. That software is amazing. I've seen one of the students have done that. I've seen how he has used that software. It's exactly you are practicing as you will be practicing as I am teaching. That's a good advantage of it. So if you practice on that software, it means you'll be able to practice a significant amount of time, which is normally not possible in live markets, and it'll enhance your confidence. It will really enhance your confidence. So the process remains the same. You'll see the daily candle, you'll see H4 candlestick on H4 chart, breaking down further into H1 variation. Then you're applying the process, going into further smaller time frames, 15, 5 minutes, what up to you to look for a high low or a lower high formation to take the trade. So I want every one of you to start using that software. I personally think, based on the video I've seen, that if you practice on that software for a week, then you should have a lot of you would have a lot of confidence in your application or execution in terms of your analysis, in terms of the whole process from each four candlesticks onwards. You guys understand this?
Hey,
Yes.
hey,
Yeah.
what's up? What's the
Say it again.
name of what's the name of the software again?
Forex or something like this. It's a free software. You can use free software, and you don't have to purchase the software. It will let you open up to 3 trades. So guys, it can let you open up to 3 trades, like proper 3 trades. Then you have to refresh it again. But if you want to buy this, it's $100. But you don't have to buy at this stage, guys. For practicing purposes, you can just use the software without even opening the trade, just highlighting the process, and you could win and redo it again instead. But if you really want to try and see properly how much pips you made, your stop loss is, and you want to see the results in the history, then you need to purchase the software if you want to open more than 3 trades. 3 trade software will allow you to open without buying the license. Again, it's not just the software that matters. The thing is, you need to use the software exactly as we are doing the paper trading. And that is what will be given to you in that videos. Exactly how to use the software, how to apply the process, how to do the analysis, how to do analysis step 1, step 2, and then leading into a trade plan. And on that trade plan, you'll be applying entries and exits. Okay? Confirm if everyone understands, guys.
Yes, sir. Yes, sir.
Okay, today's topic is market structure. I'm revising the analysis, major minor market structure, guys. It's the most important topic. It is the second analysis before you devise a trading plan. Okay? You mark your charts, you went on the daily time frame, you look at the daily candlesticks, you look at the overall price action, you see what you're expecting, what you're trying to zoom or take out of this is the first analysis, the overall intention of the price is at the resistance, you see shooting star formation, then you're expecting the price to go to the downside. Okay, just guys. So once you have done the first analysis, the second analysis is price action, the market structure analysis. Guys, your task is to identify, that's your task, is identify major market structure. Major market structure is the structure that you are trading. That is the structure that we are trading. Now, be specifically, it can be based on the daily time frame and it can be based on H4. I start from H4. If I do not see the clarity, then I go on to apply on the daily, guys. Make sense?
Yeah.
So your task is identify the major market structure. It's very easy. Now, try and understand. I've seen a bit of confusion when it comes to identification of a major market structure amongst the students between daily and H4. There is no difference. Guys, the only difference between daily and H4 will be what? Let's say I have a market structure on the daily, based on daily, and you are trading a trading plan based on a major market structure based on H4. The difference will be this. My maybe higher lows and higher highs will be having more pips than your might be. So that's H4, and that might be the daily. That will be the only difference. Do you guys understand this, first of all?
Yes.
Yes.
That will be the only difference. I mean, that will be the only difference. This might be 70 pips, 80 pips. That might be 200 pips. That's the only difference. Now, what should I do? I always start from H4 because I don't want to trade a market. I don't want to have a market structure on the time frame, on the daily time frame. If the distance between higher low and higher highs is like 300 pips, you can trade this. That's not a problem. The problem is it will be very slow for the price to give you repeated opportunities within that market structure. It will become more like a swing trading. Make sense, guys?
Yes, sir.
Yes.
Why we don't want to start from the daily? Because if we use daily all the time, then daily charts sometimes have huge pips difference. I mean, the pips range is pretty big between higher highs and higher lows and lower highs and lower lows, guys. Therefore, it will become more like a swing trading. It will become a market structure for swing trading. You'll get less trading opportunities because you have to wait for the price to travel this distance of, let's say, 300 pips, maybe, then give you another trade with the trend and then goes up again. So it'll take a lot longer than normal. And that is what we don't want. Make sense, guys? That's the point.
Yes.
Yeah.
Yes.
Therefore, we always start from H4. Because what happens on H4, normally you'll see this, the range between higher lows and higher highs be 70 to 150 pips. That's what you see. On average normal range on daily is between 150 to sometimes 300 pips. Now, if that is the case, I don't want to trade this. I want my major market structure to be based on H4. Makes sense? Because I don't want to wait for 300 pips for the price to come down before I get a trading opportunity. I rather want to trade a time frame where market structure is giving me repeated opportunities within a week. Makes sense, guys? To try and understand the rationality behind us identity, why we don't want just a daily time frame to be our market structure. Try to understand that first thing. Everyone clear?
Yeah.
Yes.
Yes.
I open the day H4 chart for the major market structure. That's where I want my major market structure be. I see now what is the best time frame out of them? What is the threshold of selecting the time frame for identification of major market structure? What time should it be? The time frame which gives you the clear price action. A clear price action is the time frame you're going to select for major market structure. Clear price action. Now see this. You open H4 chart, you see nice market structure. Can you see this, guys, right? I see the clear price action, clear market structure. The reading of the price action is so clear that I can clearly see the market structure. I will be using H4. That's it. Chapter close. Make sense, guys? Yes? That's the first clarity. Secondly, I want to see the difference between this and this. I don't want this to be this. I want them to have substantial difference between them, which is 70 to 150 pips. At least. You don't want this to be like this. No. Because this is the major market structure that you're trading. This is the major market structure. And they're going to be a minor market structure within the major. So minor market structure within the major will be something like this. So when I'm selecting H4 as a major market structure, I keep in mind that it's not like 60, 35 pips. If it's like this, 50 pips like this, 50 pips moves like this, 50 pips down, up. This is not major. Major has to be substantial. 70, 150 pips range in between. Do you guys understand this?
Yes, sir.
Yes.
Yes, sir.
It will be eye-catching to you if it's major or minor, which I'll show you in a second. It's eye-catching. But pips-wise, if you talk about pips-wise, what sort of range you're looking at, you don't want to use H4 as major market structure if the range is less than 70 pips, 65, 70 pips, to be honest. Makes sense. Now, guys, if I don't see this and I see price action like this, so choppy, if it's so choppy, it's going to be minor market structure like this. If it's not choppy, it's going to be clean like this. A clean market structure on H4 will have pips difference between 70, 80 pips, 90 pips. Make sense, guys? So if I don't see that on H4, then guys, I go on to the daily time frame and use daily time frame as my major market structure. Do you guys understand this when I use daily?
Yeah.
Yes.
When you don't see the clarity on H4, clarity on H4 means what? This is not clarity, guys. Clarity is this. Clear. And clear clarity will never come to you if the range is not increased. If I don't see this on H4, I will be using a daily time frame as my major market structure. So it's either going to be H4 or going to be daily. Both of them are right. There's no wrong. It's exact. If you're on the daily, guys, you're not gonna have repeated. If you're on the daily and daily wasn't the right time frame that you should have selected, then the only difference it makes it, you are literally trading a market structure which is so big like this that it's giving you trading opportunities not repeatedly. That's it. You guys understand this?
Yeah.
Yes.
Yes.
Damien, what was the name of the software?
It's Soft4X FX Simulator.
Guys, don't just start downloading the software. Please wait for the videos for me to share, because it's not important that you guys use the software. The important thing is you guys use the software exactly as I am asking, and he was the first person who made a video on that, because I heard of this software before as well. It's not important software. It's important that you practice them exactly as you paper trade. Okay. Now the question is, ask yourself a question: what is the time frame should I be opening to look for my major market structure? Always H4. That's first thing. Guys, when do I go into daily time frame and I'm not using H4, can I see my H4 market structure is choppy? If it's choppy, that it's not going to have a range like this. Choppy price section is like this, which is, then only I'll switch on to the daily time frame. Guys, it is the major market structure. Once you identify that market structure and set that market structure certain time frame, you are trading that particular market structure. If the trend is bullish, is based on that market structure. The trend is bearish, based on that market structure. There is a break of market structure based on the same market structure. You cannot start changing your time frame for the major market structure after this. That is the market structure only what I'm trading. Makes sense? Please confirm, guys, if you understand this.
Yes,
Yes,
I
sir.
understand.
Good. Anyone has any question?
No.
Anyone else? Guys, any questions?
Are you gonna go over some charts, Wakar?
Yes, I'm going in a second. Yes.
Okay. I got questions on a couple charts.
Let's try and identify the major market structure on few charts first, just to see this. And guys, for market structure, there is two things called market structure, and there's another thing called variation. Let me tell you the difference between them. What is the difference between them? Anybody could share with me?
Variation is just support and resistance
Yep.
in between of market structure.
A variation is higher lows and lower highs, which does not form lower lows and higher highs. But market structure, in market structure, higher lows will always make a higher high, and lower high will always make a lower low. That is the difference, guys. Everybody understand this? I'm going to show this.
I mean,
Yes.
this is the same thing? That's kind of confusing right now.
Oh, well, okay, get this, try and understand this first statement. A market structure, a higher low has to make a higher high, guys. Everybody know this, right? A
Mhm.
high has
Yeah.
to make a lower low, otherwise it's not valid. Anything in any higher low and lower high in between, which doesn't make a higher low and a lower low and a higher high, is your variation, first of all. Makes sense? I'm going to show this. So let's say this. Understand this concept, guys. You would never be able to trade without this concept.
Yeah, market structure.
This is valid higher low, higher high. So these are the valid ones, right?
Mm-hmm.
This higher low made a higher high. This higher low made a higher high, right? So this is your market structure. Then what happens is this. So guys, now you have this higher low. You have these. This is a higher low. Guys, the question is, what are these? First of all, what level what price breaks this higher low level? So the market structure should have been changed, isn't it, right? Do you guys understand? In a bullish market structure, if the higher low is breached, market structure is gone. Is that not the case? Yes?
Yes.
Guys, then what is it? Has the market structure changes? The question is, anyone?
No.
No.
Guys, for the price to break the market structure, price has to break a higher low, a valid higher low, which forms a higher high. Makes sense, guys? Yes?
Yeah.
So unless price breaks this level, market structure will remain bullish. Makes sense, guys? Yes? Everyone understand this so far, guys? I'm going to go slow so you understand. For the
Yes,
price
sir.
to break the market structure, the price has to break a higher low, not just a higher low, a valid higher low, which has previously made a higher high. Makes sense, guys? Yes?
Yes.
Yeah.
So a price breaks a higher low there, a lower high there, made a higher low. I mean, the market structure should have been bearish here and it should have been bullish here. But guys, try to understand, what was the last higher low? Valid higher low which made a higher high. Tell me any higher low which has made a higher high yet, first of all. Which higher low made a higher high, guys, out of this?
That broke? No, what?
Please use your brains on this, guys. I'm asking which higher low has made
Yeah, the last one.
anyone?
11.
Last.
Exactly, last one. So, guys, price has never breached the market structure, bullish market structure, because price never break this level. First of all, everybody understands, right? Yes.
Yes.
Yeah.
All this movement is your variation until this higher low. This higher low has made a higher high. So this is your new market structure level. Do you guys understand this, right? All of this is your variation. You understand, guys?
Yeah.
Yeah.
Yes, sir.
Understand, even though the variation turns bearish here, the market structure is bullish. And this is where the variation turns bullish again. Do you guys understand this, right?
Yep.
Yes.
Fresh, you understand? It's
Yes,
very
I do. I do now. Yes.
If you are trading, if you are buying within a bullish market structure, you only can buy when the variation is in your bullish as well. Otherwise, you will go into a drawdown, guys. Make sense?
Is there?
If I am buying in a bullish market structure and the variation turns bearish, I will close my trade, wait for the variation to change, and I'll take an entry there. Even though I'm buying only because I'm trading with the market structure, let's say, so I'm not selling, it does not mean you be just buying within that bullish market structure at all times. You have to wait for the variation to be in your direction, to be bullish before you start buying. Try and understand this. This will minimize your drawdowns, guys. Make sense?
Yep.
Everybody understand the relationship between market structure and variation? Yes or no?
Yes.
Yes.
Guys, everybody understand the relationship between market structure and variation? It's very important. Yes or no?
Yes.
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 But I
Not
got a
support
question.
and resistance. It's higher lows and higher highs, low lows and lower highs, just like market structure. The only difference is they are not valid higher lows and higher highs, meaning these higher lows not gonna make higher highs, nor those lower highs gonna make lower lows. That's it. Makes sense?
Yes.
Yeah.
Good. Let's move forward. So if you identify the major market structure, just remember every higher low will form a higher high. Every higher low will form a higher high. Anything between is your variation, guys. You understand? Yes?
Is there? Now, of course, sometimes I see you using higher lows, but that don't form higher structure.
No, that is I'm using variation. I'm using variation, by the way. I'm not using market structure. I also take trades from variations as well, and I'll show you what time frames that will come to that later. But guys, I sometimes let me give you an example. Price came down. See this? Price came down, and this is a daily level, right?
Yeah.
On the daily, I started my analysis. On the daily time frame, I see this pin bar. I went on to H4, I see an bullish engulfing candlesticks, right? Yes.
Mm-hmm.
What is my market structure?
Bearish.
Good, bearish. Guys, then I know this bullish momentum price might go to the upside. So I make a trading plan like this based on H4, right? Counter trend trade. Remember, in your major market structure, we trade with the trend. We also trade against the trend based on the major market structure only. So I will be buying and selling within major, meaning I will be trading this and I will also be trading this. Make sense?
Mm-hmm.
Now, guys, then I will be waiting for what? I will wait for the price to show me bullish variation based on H4. Yes, which will be something like this. It's going to be like this. Price will come, then price will make this. It's going to be with candlesticks, it's going to be something like this. When I get that bullish variation, then I will start buying, firstly hoping the price is going to retrace, because price, if has to go down, it has to be in the bearish variation. Make sense, guys? Yes.
Mm-hmm.
So price
Yes.
will be like this. I will be buying only. I will be buying only. It's still a bearish market structure. I'm buying counter trend trade and I'll be in the trade as long market variation is bullish. And guys, look, variation changes to bearish, right? It changes to bearish. Now I will be selling with the trend. Everybody understands, right? My market structure is bearish and variation is bearish. I will be selling. Here, either you are not trading against the market structure, you'll be waiting for the price to finish this bullish variation and give you that bearish variation there. So you'll be selling. Of course, in your major market structure, we buy and we sell also. Therefore, when the variation changes, I will start buying. What happens is, if I see very strong momentum, you can expect the price to break the market structure as well. Do you guys understand, right? As when the price breaks the market structure, price changes its variation first, then the break came. So if the price has to break a bearish market structure, variation will turn bullish first, eventually leads to a break of market structure. If the price has to break a bullish market structure, variation will turn bearish after it will break the market structure. Let me give you an example on that. This is your market structure, yes? Variation will turn bearish first. Can you see this? Normally, if the price has to retrace, I'm going to discuss this, but just listen. Price will continue the bearish variation and it will take out the market structure. Now, guys, so do you guys understand the relationship between variation and market structure? Yes or no?
Yes, sir.
Yes.
Yeah. 100%.
To be honest, if you trade with H4 variation, hardly you lose the trade. This is the most easiest direction. Which direction should I be trading is H4 variation. Now see this. You're not trading H4 variation, guys. You're just trying to understand the relationship. Guys, now see this. What is the difference between major market structure and minor market structure? Please focus with me, everyone. Yes? You identify, price moves like this. This is the level. Price moves like this. Guys, this is your major market structure. What is this? Your line is major market structure. Within major market structure, you've got minor market structure in which price is doing like this. Minor market structure is bullish, major market structure is coming up. Major market structure can only go down if minor market structure turns bearish. Guys, can you see this?
Yeah.
Do you guys understand this, right? Please confirm. Guys,
Yes.
if I have to take a sell trade based on a major market structure, the first thing, I got the candlesticks from the daily. I can see the intention. Price is at the level. Price is at the level. I have 4 bearish candlesticks. Everything is there. I've got daily big shooting star. So I've done my analysis. Number one, price is at the level. Daily candlestick is bearish. I went on to H4. I see bearish candlesticks. Guys, remember, you can only start trading the sell trade. So your analysis is price will go to the downside. You can only start trading this. First of all, you need to know what is your major market structure. So in your major market structure, it might very well be a bearish market structure. This is 61.8 Fibonacci. But let's say price is there. You can only take a sell trade after price breaks your minor market structure, and minor market structure is in your direction, meaning I will be selling this here. Lower high, lower high, lower high, lower high, lower high, lower high, lower high on the minor market structure, and I will be selling overall within the major market structure. Do you guys understand this?
Yeah.
Yeah.
Trish, do you understand this?
Yes, I understand.
It's the concept that you need to understand. Let's say this is your major market structure. How would I have been? How did I buy here? I would have seen minor market structure being bearish, turn bullish, then I start buying there. Simple. So your entries will be this. Now in your bullish market structure, major, get the concept. Practice is easy. Get the price can retrace this. Remember, we say price can retrace this, price can retrace this, price can retrace this. Yes, we learned this. Yes, guys. What happened is, how do you pick where to buy? Guys, minor market structure is going to be bearish, price going to be coming down. Where the minor structure changes to bullish, that is where you start buying. Make sense? Do you understand?
Yes.
Yeah.
Rule number 1, structure has to change. Oh, rule number 2, then the candlestick, then you buy. So variation or structure, we stick to structure for now. So guys, if I see this, let's say I bought here. How did I buy this? I was in the minor structure turns bullish. I got a higher low, then I start. Do you guys understand this?
Yes.
Everyone understand this, guys? Carl, you understand? Lindsay, you understand? Sam?
Yeah.
This is called the relationship between major and minor. And guys, you need to think about this. So there are two formations that you buy and sell. In the minor market structure, if you have to sell major market structure, minor market structure has to give you this formation to sell. It has to be bearish. And if you're buying, let's say you see in the major market structure, buy from there. Minor market structure has to turn bullish before you start buying, guys. Make sense? Otherwise,
Yes.
it's just gambling. Let's go and look at the charts, guys.
Oh, could you put a Swiss JPY?
I'm not
Check
doing
it
so.
out.
I'll do that analysis. Just let me finish explain the concept. What I'm explaining first, then I'll try to chart or the charts that you're looking for. But guys, I open the chart and I'm looking for a major market structure. Okay, guys, I want to identify major market structure. The question is, what chart time frame should I use? First of all, I'm opening H4, right? Guys, can you see this? Can you see this? Can you see the choppiness? Anybody can see the choppiness?
Super choppy, yeah.
So this is my minor market structure. Minor market structure is always going to be like this. So guys, I'm not using their H4 as a major market structure. Do you guys understand this? Yes?
Mhm.
Yes.
Yes, sir.
Yeah.
H4 as a major market structure if the price is showing me this price action. Can you see this? Just giving you an idea. Previously, had I used major market structure, guys, there you would have used major market structure. Guys, can you see this? Can you see this?
Yes.
Yes, sir.
There I would have used H4, this high low. But you can see the difference. You can see the difference between that price action and this price action. Look at the choppiness. You will see this. You will see this. Small retracements in between. So therefore, we are using a daily time frame for Euro USD as a major market structure, guys. Well, I have been using, so previously I was using this. Do you guys understand this, right? This is my major market structure. Everybody understands?
Yeah.
Yes.
Guys, principle is I am just trading my major market structure. In my major market structure, we also buy, we also sell, we do both things. So based now my trading plan based on major market structure is what, guys? What is the major market structure?
Short. Oh, well, bearish.
There. I'm looking for this. Yes. You can buy against the major market structure. You can trade with the major market structure. You need to know where you are at all times in your major market structure. Do you guys understand this?
Yeah.
Yes.
Yeah.
First of all, good. So what is the trend for Euro USD? The one I am trading, it's bearish, guys. Simple. Now, if I have to sell this, I'm showing you the principle, guys. Price came down, price went up, and the price went down, right? So guys, let's say I took a sell trade on this level. Let's say I took a sell trade on this level. I was looking for sell. I was looking to trade. I'm just talking about trade with the market structure just for the purposes of learning, guys. I was looking for a lower high to take a sell trade around this level. Everybody understands, right? Yes?
Yeah.
Yes.
Guys,
Yeah.
forget the candlesticks. You will be doing your daily analysis. You need an H4 candle, all of this. We are talking about major market structure analysis right now, right, guys? Of course, you're going to be doing all that analysis. Guys, you're in your checklist. If you have to sell at a lower high, or buy at a higher low. It's technical. I'm going to speak about this tomorrow again, guys. Twice. I'm going to touch base on twice because I've never touched base last week or the week before. So I just want this to be right, guys? This is 80% of trading. If you want to buy, guys, you need the minor structure to be bullish, the minor structure to be bearish there. Make sense, guys? Yes?
Yeah.
So guys,
Yes.
the structure is bearish. It might turn bullish. It has to be bearish before you start selling it. You understand? Yes. If
Yes.
it again from here, it has to turn bullish. It turned bearish, and literally, I am executing trades based on minor market structures: lower highs, high lows, lower highs, high lows. Do you understand, guys? What I'm doing? Repeated entries. Yes.
Yes.
Yeah.
Danny, you understand, brother? Very important, Danny. Understand this. Don't focus what I'm teaching you. Step by step, Danny. Do you understand this?
Yes.
Guys. Okay. Now, guys, I'm going to practically show you this. So we got a buy sell trade there. Then price came here and we got a sell buy trade there. Price came here, we got a sell trade there again, right? So what has happened is minor turns bearish, we start selling. Minor turns bullish, we start buying, and turns bearish, guys. Guys, normally you need to trade with minor market structure. So you need a break of minor structure, minor market structure, right? Yes?
Yeah.
That's ideal. If you want to take aggressive entries, you need at least a break of variation to take the trade. Note this down, guys. Sometimes I take a trade with a break of variation as well. Meaning, if I see H4 candle like this, if I see daily candle like this, I'm not going to wait for a break of minor market structure. I will just take a trade based on break of variation on minor market structure, which will be earlier than the break of structure sometimes. Make sense, guys? Yes, I explained you the process. Yes. Do you guys understand this? This down, guys. Two options. Break of market structure is ideal. You can trade also the break of variation, start selling, trading, hoping it will lead to a break of market structure as well, guys. Make sense, guys? Please confirm if everybody understands this.
Yes, sir.
Yes, I understand.
Okay, now we're gonna apply and see if we get, when do we start selling on the lower highs? So you're selling on a lower highs based on minor market structure, on that minor market structure, and you're buying on a higher lows on the minor market structure based on the analysis that you did on the major market structure. Make sense, guys?
Yeah.
Yes.
Now let's see. For the minor market structure, you can use 2 time frames, H1 and 30 minutes, which is the good news. I'd like to use H1. It is more clear in nature. It's less choppy. I use 30 minutes when I want to see within H1 time frame. When I don't see the clarity on H1, I zoom into 30 minutes, see inside. So guys, I use them like this. You can use H1 30 minutes. It's entirely your choice. I suggest use H1. Also, I switch on to 30 when I don't see the clarity. When I can't see the variation, the price action, it's a big candlestick. It's not any variation. I zoom into 30 minutes. I've got 2 candlesticks, so I might get the variation. You understand, guys? But principle H1 is a very decent time frame. Now, see this. We're going to apply on H1 first. Okay, guys, we are there. Everybody see this, right? Yes? Guys, what I need is a break of market structure. Break of market structure has taken place there, guys. Everybody understands? Please confirm. Yes?
Yes.
So I would be waiting for a break of market structure, and then I'll start selling there. Everybody understands, right? Now, overall, I'm selling with the trend of a major market structure. Everybody understands? Please confirm that.
Yes.
Yeah.
Sure.
Yes.
There, right?
Good. I might have traded the variation and start selling there. Can you see this?
Yes.
Wasn't it
Yeah.
a little higher? Is
So
it a
it's
little
fine.
higher?
It also made a higher high. I think it is a variation, but it's not a variation. But guys, I think personally, this is your market structure. Give it a bit of, this is your market structure. This is a minor variation in between, guys. Okay. So guys, see this. I would have traded the variation. I start selling, hoping it will take out the structure. Again, break of structure is what you want to see, should be trading. Variation, break of variation will always be slightly aggressive, but yet it is effective if it is based on minor H1 or 30 minutes time frame. Makes sense, guys? Yes? Everybody understands completely how to take in the trade. Relationship between major and minor. Yes or no?
Yes, sir.
Yes.
Guys,
Yeah.
then we said it's going down with the trend, and then it start going up. So guys, it can only go down if the structure remains bearish. Makes sense, guys? Yes. Now we are looking to buy based. So we went on to major market structure. We are sitting on the major. Price arrives here. I'm expecting the price. Maybe price going to reverse now, because price has done its journey. Price made a lower high. It might be lower low, and I'm expecting a price to make another lower high. That's how we do trade. Yes. So I did my analysis, price on the daily time frame suggesting buyers coming in, blah, 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 whatever it is. When you will start buying major minor market structure, guys, just see this, H1. I will wait for two things, break of minor market structure. Guys, so this is a break of minor market structure. Everybody understand this, right?
Yo, somebody need this.
Noise, control the noise, please. Anyone, control the noise. Guys, okay, control the noise. Carl, it's coming from you, brother.
Oh, I'm sorry.
Yeah. Okay, guys. So I start buying after the minor structure has turned bullish. Guys, can you see this, right? High, low. Yes?
Yes.
Would you consider that a higher, proper lower high?
High and low. This is a high and low, guys. See this.
No, I'm saying, is that the proper lower high? Look at that, doesn't even.
Yeah, this lower high has made a lower low. So that is a lower high. Before this, you've got this. You've got this. You've got this. You've got this. You've got this.
Yeah, that's what I was thinking was a lower high.
You've got this. No, this lower high made a lower low. This lower high and this lower high is the same, made a lower low there. And this lower high has made a lower low, and that was breached. Makes sense, guys? Yes? Everyone understands, right? Major minor market structure relationship.
Yeah.
Guys,
Yes.
I
Yeah.
just want
That's
you to
more
understand this.
consolidated.
I'm teaching that analysis today. I'm not teaching you how to trade. I'm just teaching you get this analysis, understand this analysis. Go back and try on the chart. We will connect all analysis together to make a trading plan. That's our next topic is get this right. When you will start selling, when you will start buying, then again, guys, price went up. Let's say price went up here again, guys. My analysis, I'm thinking, okay, I see the sellers coming in, H4, I want to sell. I'm looking for a lower high, guys, on a major market structure. I need in the minor to show me. You guys understand this, right? H1. Guys, if I am trading this, then personally, break of this will break the structure. Guys, everybody understands, right? Break of structure. Now this is break of structure. Yes. Now you're looking for a lower high to start selling, guys. Break of structure. If this takes place, this is your high. You need a lower high. It can be what? Try and understand with me. Break of structure. It can be this. 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 It should not break this. If it breaks this, that setup fails. So, guys, it remains in a sell. It remains, but you could have taken advantage. You could. This is all your sell now. Make sense, guys? Lower high. Yes. Now I'm going to talk about how you can sell this. When variation changes, I will be selling it in between. We'll learn that later. We'll focus on that later. Right now, try understand this relationship, guys. Don't start trying where you be selling. I'm not teaching you how you be selling. I am teaching you only that relationship between major and minor. When you start selling is when this will take place, guys. Everybody understands, right?
Yeah.
Good. Anyone has any question question on the topic of a relationship between major and minor market structure? First of all, specifically to this topic. Anyone? Carl, Trish?
No, I'm good. I understand.
Fish?
Yes, I
Guys, so you've done this, you've done your analysis. Again, guys, try mute yourself. Who is this? You've done your analysis, price action and levels analysis, guys. Then you've done that. Then you're going to do your analysis on that. You will be doing every day, because once you identify your major market structure, it will stay as it is for like week or 2 weeks, right? So you'll be trading that. But whenever, every day, whenever you begin your trading, you do your analysis of price action and level. Then you're going to do for your analysis major and minor market structure. How are you going to do this analysis? I've taught you, you need to identify major market structure, guys. Everybody understands, right?
Yeah.
You can check with me what time frame I'm using for what pair. You can check with me, guys. You guys need to do the exercise of identifying major market structure, identifying, and then try and backtest its relationship with minor. I'm going to give you an example how you should be doing this. Let me show you. I'm using H4 as my major market structure. The reason is I can see, can you guys see this, right? So I don't see the choppiness like this. As I want you to do this practice, you guys should do this practice of identifying major market structure. So I used to do it like this. I'm just starting from there. A lower high made a lower low. It's break of structure. Higher low made price went there. This has made this. You got a break of structure again. So you got a break of structure. So this higher low has made this low low. You got a break of structure again. So you got a break of structure. And now, what is the market structure right now? Anyone would say? What is the market structure now?
Bearish.
Yeah. If I'm trading based on H4, then my market structure is bearish, guys. I used to do this. Okay, I'm going to tell you how I used to do this. I used to make boxes. Then this is how, if you don't do an exercise like this, you're never going to get this. Because if you do like this, you have to think lower high. Guys, I'm just quickly showing you guys. This is exactly how I expect you to guys. This is BOS. So I literally do a paper trading. Exactly, I'll do a paper trading as literally I'm teaching someone. Hello. Guys, everyone understand how I'm doing this. Forget what the market structure is. The way you're going to be doing this, right? Everybody understands, right? I want to see the, I want to see if there's a break of structure. I want to see a line mark and BOS written so I can read on that and totally understand. And I expect you guys to send me your major market structure charts like this. I can literally read and see what's going on that. Make sense, guys? Yes or no?
Yep.
Yes.
Yeah.
Yes, sir.
That's everyone assignment, guys. I'm going to show you on EJ, major market structure. Just see this. Guys, you need, this is where you'll be spending time. Once you get this right, the rest of the trading is very easy. If my major market structure is based off H4, guys, this is what I am. There is a break of structure. I want to see your charts like this. If you can't show me your charts like this, guys, you think you understand, forget it. This, if you do like this, you're putting pressure on your mind to identify every high low and a lower high. This is where if you do 10, 15 charts like this, you get this. If you just think, okay, I understand, oh, I know where it is, or it's just too easy. That's bullshit, guys. It's not going to work. Absolutely. Your conscience not going to get it. You think you get it, you never get it. Guys, then, and once I've done this, I leave it written on the charts and keep on trading. It acts as a reminder.
What are you marking on the clouds, Wakar? On the little cloud? On the breakout structure?
This is BOS. So guys, where we are right now, what structure are we in?
Bearish.
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 So if the price breaks this, what will happen?
Break of structure.
Break of structure, then this is your low. Then I will be trading. My trend will change. I trade against the trend, and with the trend, I see the sort of retracement. I was using daily time frame for the purposes. Now I'm using a daily time frame. That's perfectly fine, guys. You can use H4. It's 100% retracement. So my trading plan is this. We will learn then application of Fibonacci. It could very well, if rejects, go straight down. With the lines with it. We'll see this. This trading setup. Previously, this was the trading setup. Well, I'm going to talk about this, the trading setup, in the next session. You need to understand. You guys need to understand the relationship. Do you guys understand this, right? Yes?
Yep.
Let's say I'm thinking price going to go down. Let's say. Yes? Let's say. My question is, what I want to see on the minor market structure, guys. What is it?
Be bearish.
Bearish variation.
Yeah, so it has to be from bullish to bearish. Stage 4, I'm going to use 30 minutes time frame. I'm going to show you guys. Variation has to be bearish or market structure at least. Guys, I am in a sell trade on this, by the way. Do you guys understand? Do you guys understand? Yes?
Yes.
Yes.
Minor structure is bearish, right?
Minor structure is bullish. It's a variation turns bearish. Minor structure is bullish.
Bearish.
Minor structure is, it turns bearish there. Look, it turns, maybe you can question, it turns bearish, but then it becomes bullish again here. Can you see this? If it turns bearish, let's say it turns bearish, but suddenly it breaks again. So it's bullish right now. I'm trading the variation only, guys. When you're trading variation, you have to be careful. I'm trying, guys, you don't trade this. Just understand the principle. When the relationship between major and minor means when you trade in direction of major. That's it. Because I'll tell you, it's not just so simple that you start trading like this. We're going to talk about this. You guys understand what I'm looking for if I'm strictly doing major minor market structure? Everybody understands, right?
Yep.
Yes.
As right now, I am looking for the break of box to give me the trading opportunity, guys. So I don't care what minor structure is. In between, you want to see the break of this before it goes down. Otherwise, you might well see the price will go up further. You guys understand? Guys, this is called analysis. We'll have a second lecture on this. Today's topic was not to teach you trading or you need to understand in one sector of the whole strategy. Major, minor. Get this right, then I'm going to connect both analysis. Analysis 1, section level analysis, major, minor, leading to a trading plan. In the trading plan, I'll show you why I've got this here and I'm not saying start selling there. Makes sense? Because then you will be, guys, mute yourself, please, please, please. Then it's you now. Guys, because when you are making a trading plan, you can't just trade major and minor market structure, and you can't just trade based on analysis of price action and level. You have to do a balancing act between them to devise a trading plan, which I will teach you later. Make sense, guys? Yes?
Yeah.
Yes.
Everybody understand major market structure and minor market structure makes relationship. Yes?
Yes.
Everyone.
That variation is H4 right there. If it breaks, that's an H4 variation.
Yeah, exactly. This is an H4 variation, guys. That's what I'm waiting for. Well, I'll talk about this later. Today, I just want you to understand major and minor market structure, individually understand. Later, I'll connect this with with the price action next session. But everyone understand, please confirm. It's very important, guys. Go back, identify your major market structure, and see then in your major market structure, mark the lines like this as I did, and see how when you go to the minor, where it start bullish, where it bearish. Make sense, guys? Yes?
Yeah.
Yes.
Guys, you cannot do this exercise and understand this unless you practice this on the charts. And this practice will take you time, will consume your time, but this is almost, you are almost there for successful trading. There it really gets intense. Make sense?
Yes.
Do the minor structure, the break of minor structure, or a break of variation at least to trade in your start triggering your trade, guys, at least. Okay, good, guys. That is it for today. This is your trading. There's no trading room. Okay, Danny, I need to mute you if you stop. Yeah, please, guys. There's no trading room later tonight. This is the trading room for the night. Actually, I'm having it early on Sunday, so that certain students from the UK can attend the room. So, guys, that is it. You learn major minor market structure relationship. Tomorrow, I am going to revise the analysis, price action levels analysis. Whenever you open the charts, then price action and major minor market structure. I'm going to show you how you're going to apply that process to make a trading plan. What step-by-step approach that you have to apply, guys, to make a trading plan. That's what we are focusing on. And we are focusing on analysis throughout this week, guys. That is where I want to focus on. Process we've been focused on. You've got the steps, 3 steps, which I will, of course, show you tomorrow as well quickly. But this is where our focus is. You get this right, you get this direction right, you eventually will win. You get this wrong, no matter how good you are. If you are, let's say, you say you're going to buy this, and you ignore the major market structure direction, guys, trust me, you are done. No matter how good you are in entries and exits. The entry and exits will help you not to go into a drawdown. A good entry is an entry which takes you into a minimum drawdown. A bad entry is an entry which takes you into a drawdown. But it is your analysis that wins you. So if my analysis is this, a good entry is this entry, went into profit, a minimum drawdown. A bad entry is an entry, went into a drawdown, and eventually went into profit. So what was the factor that won both trades was my analysis, not my entries. Entries would only help you to reduce that drawdown. That is it. And this is why you should use that strategy in entries and exits, which helps you to stay in the trade as much as it goes in your direction with a minimum drawdown, and kick you out of the trade if the trade is against you with a minimum loss. Make sense? Yes?
Yes, sir.
Yes.
Yeah.
Good. Anyone has any question?
Charts, you got the time.
You said USD chef, right?
No, chef.
You
CHF.
need to- Yeah, I'm going to show you. I'm going to use for this. I'm not using a daily time frame. Guys, can you see this? Why I'm not using? Can you see this?
Yeah.
Too big. Simple. It's too easy sometimes. H4 I'm using, and busy. Okay, guys, what is my market structure on H4? Anyone?
Bullish.
It's bullish. Yes, well done. Okay, what is the variation?
Bearish.
Bearish.
Yes, guys, again, I'm trading. Price can do this now. Price can do what? Just see this. You guys understand? Everybody understands, right?
Yep.
Yes, sir.
Yes.
Good, guys.
Yeah.
Now, if the price is coming down, what's happening on the minor market structure right now? Anyone?
Bearish.
It's bearish. Good. Let's see this. So, guys, I'm going to show you. So let's say I wanted to take a trade against the structure, because within my major market structure, we trade with the structure or against the structure as well. So price on the double bottom formation, I need to know what kind of trade I'm getting into. So what kind of trade, if I'm going to sell this, make a trading plan, what kind of trade I'm looking into within my major market structure, trade with the trend or a counter trend trade, anyone?
On the trend trade.
Good.
Counter.
For this trade, for me to, after my price action analysis, candlestick analysis, whatever, for me to start selling it, on what lower high I need to start selling it? Anyone?
Minor.
Minor, exactly, guys. I want to see on the minor before I start selling it. That's right. Let's go to minor now. H4, 30 minutes. Strictly here, everybody understands, right? Guys, strictly here,
Yeah.
break of variation, you can start selling there and you should still be in the trade. Now, that's the first thing. If I want to buy this, let's say I apply Fibonacci. Let me give you an example, guys. This is how you sit and make a trading plan. Let's say price gonna bounce from this zone, let's say. Simply, I will be waiting for candlestick analysis is one thing. I'll discuss that later. We're gonna, from market structure analysis, I want to see what, guys, see this.
Minor structural variation.
Exactly. Giving you that variation. Higher, low.
So you don't even have to wait for the candle. You can just like
No.
get it off the minor structure.
No. Let me stop you here. I'm not teaching you how to take a trade based on price action. I'm trying to teach you specifically major minor market structure. Don't start assuming that you don't need a candle. You need a candle. We will talk about this later. But for the sake of this, let me tell you this. When the variation forms, you automatically have a candle on H4 forms, because variation means buyers engulf the sellers. So you definitely going to have a bullish candlestick there on H4. We'll talk about this, a step-by-step approach. All you need to understand right now by this lecture, when you start buying and selling, forget how you start buying and selling. Make sense? Everyone?
Gotcha.
Yes.
Confirm. Trish, you understand how I'm waiting for the trade? Yes?
Yes, I do understand. Yes.
Guys, go back, practice. I expect your charts of major market structure, showing you major market structure, higher lows, lower high formation, written as well, HL, LL, and also aligned with BOS. I want to see like that. Share with me at least 10 charts. If you can send me a question for Euro USD. I'm using H4 as a major. What you using? I will tell you exactly what I'm using. It's fine, guys. This is the practice. You need to 15-20 charts before you even think about trading successfully. Guys, thank you very much and have a profitable week. Thank you.
Thank you, Waqar. Take care, brother.
Thank you.